The price of gold is sky high. In the last few months, we've seen an unbelievable jump in its value. Investors are rushing to buy Paxg, a digital token backed by real gold. This digital gold rush is catching everyone's attention. But why now? What's driving this gold rush in 2025? Financial analysts are trying to figure out this mystery. Buckle up, because we're about to dive into the exciting world of gold, geopolitics, and the future of finance. The story behind this is fascinating. Paxg is more than just a digital asset. It represents a new era in gold investing, combining the safety of physical gold with the convenience of digital technology. It's a reflection of the world's anxieties. Financial crises and global uncertainties are pushing investors to look for safe havens. The global economy is teetering on the edge, markets are shaky, and trust in traditional currencies is falling. War and unrest are spreading. These events are creating an atmosphere of uncertainty and fear. The US dollar, once a symbol of stability, is weakening. Inflation and monetary policies are eating away at its value. In times like these, investors turn to gold. It's a tried-and-true strategy for protecting their wealth. It's a safe haven, a store of value that has weathered countless storms. Since ancient times, gold has been a symbol of wealth and stability. And Paxg offers a modern and convenient way to own this ancient asset. With just a few clicks, you can have access to physical gold without the hassle of storing it. But is this gold rush sustainable? Let's find out. The answer might surprise you and change how you think about future investments. The world is a powder keg right now. Tensions between superpowers are simmering. Regional conflicts threaten to erupt. In Eastern Europe, the situation remains precarious. The South China Sea is another flashpoint. These conflicts have consequences. They disrupt supply chains, fuel inflation, and create uncertainty. Investors hate uncertainty. They crave stability. And that's where gold comes in. Gold is a tangible asset. It's not subject to the whims of politicians or the manipulations of central bankers. When the world seems to be falling apart, gold stands firm. It's no wonder Paxg is rising as geopolitical tensions rise. The US dollar is the world's reserve currency, but its dominance is fading. Years of reckless spending and printing money have taken their toll. The US national debt is a ticking time bomb. As the dollar gets weaker, gold gets stronger. It's a simple matter of supply and demand. When the dollar goes down, it takes more dollars to buy the same amount of gold. This makes gold more expensive in terms of dollars, which is exactly what we're seeing with Paxg. A weak dollar is good news for gold bugs. It's another reason why Paxg shines in these uncertain times. But the dollar isn't the only factor at play. Central banks around the world are piling up gold. They're buying it at a record pace. Why? Because they know something most investors don't. They know gold is real money. Central banks understand that paper currencies are flawed. They can be printed into oblivion. They can be devalued by inflation. But gold is different. It's finite. It's durable. It has been a store of value for thousands of years. When central banks buy gold, they send a powerful signal to the market. It tells investors that gold is a valuable asset to hold in a diversified portfolio. This increased demand from central banks is another positive factor for Paxg. Section 5, Safe Haven in a Storm. Investors seek shelter in Paxg. The stock market is a casino. Bonds are a fool's bet. Real estate is overvalued. Where can investors turn for safety in these turbulent times? The answer is simple: gold. And Paxg offers a convenient and secure way to own this timeless asset. Unlike paper gold, like ETFs, Paxg is backed by physical gold stored in secure vaults. Each token represents 1 troy ounce of gold, redeemable for physical bars. This transparency and security make Paxg particularly attractive in times of crisis. Investors are flocking to Paxg because it offers a safe haven from the storm battering the global economy. Section 6, The Future of Gold. What's next for Paxg? Predicting the future of gold is a fool's errand. Market volatility and outside factors make any prediction uncertain. But we can analyze potential scenarios. By looking at current trends and possible future events, we can get an idea of what might happen. Let's explore the bullish, neutral, and bearish outlooks for Paxg. Each of these scenarios has its own implications and triggers. Bullish. Imagine a world with rising geopolitical tensions, runaway inflation, and a collapsing dollar. These factors could lead investors to seek safety in gold. In this scenario, gold would skyrocket. Demand would increase significantly. pushing prices to new highs. PXG, being directly tied to the price of gold, would reach unimaginable heights. Investors in PXG would see exceptional returns. Neutral. Now, imagine a period of moderate economic growth, contained inflation, and relative geopolitical stability. In this environment, gold wouldn't have the same bullish drivers. Gold might hold steady or experience modest gains. Demand would remain constant, but without major fluctuations. Paxg would likely trade sideways, reflecting the overall market sentiment. Investors would see more moderate returns. Bearish. Finally, consider a world with a sudden resolution of geopolitical conflicts, a resurgence of the dollar, and a booming global economy. These factors would reduce the need for safe havens like gold. Gold could lose its luster as investors seek riskier assets. Demand would decrease, leading to a drop in prices. PXG might experience a downturn, but it would likely be less severe than other asset classes. Investors could still find value in its relative stability. Section 7. Strategies for PXG, investing in uncertain times. Given the current market conditions, how should you approach PXG? With the volatility and uncertainty that characterize financial markets today, it's crucial to have a well-thought-out plan. Here are some strategies to consider to maximize your PXG investments and protect your capital. Dollar cost averaging, DCA. Instead of trying to predict the market, invest a fixed amount in PXG at regular intervals, regardless of the price. This strategy is especially useful in volatile markets. This reduces the impact of price volatility and allows you to accumulate more PXG when prices are low. Over time, this can result in a lower average cost per ounce. Waiting for corrections. No one can buy at the absolute lowest point. However, it is possible to identify patterns and wait for market corrections. Instead of chasing the rising price, wait for corrections or pullbacks to enter a position. This can help minimize risk and maximize profit potential. This requires patience and discipline, but it can lead to better entry points. The key is not to get carried away by emotions and to maintain a clear strategy. Diversification is key. Never put all your eggs in one basket. Diversifying your portfolio can reduce risk and increase return opportunities. Allocate a portion of your portfolio to PXG, but also consider other asset classes such as real estate, commodities, and even cash. This way, you can protect yourself against volatility and take advantage of different market opportunities. Section 8. The dangers of gold risks to consider with PXG. While gold is considered a safe haven, investing in PXG is not without risks. It's important to understand these risks before making any investment decisions. Asterisk volatility. Gold prices can be volatile, especially in the short term. PXG, being tied to the price of gold, will also experience these fluctuations. Asterisk regulatory risks. The cryptocurrency landscape is constantly evolving. New regulations or government interventions could affect the use and trade of PXG. Asterisk counterparty risk. While PXG is backed by physical gold, there's always a small risk associated with the custodian holding the gold. It's essential to choose a trustworthy and reputable provider. Section 9. Conclusion: weighing the gold rush. The world is changing fast. We're entering uncharted territory. The old rules don't apply anymore. In these uncertain times, gold offers a beacon of stability. PXG provides a modern and accessible way to own this timeless asset. But it's not a magic solution. Like any investment, PXG carries risks. It's crucial to do your research, understand your risk tolerance, and make informed decisions. The future of PXG, like the future of the global economy, is uncertain. But one thing is clear: gold has been a store of value for thousands of years. And that's a trend that's not likely to change anytime soon.